Welcome to Credit Monster, where we talk about everything credit. It's your host once again, Daquan. Let's get to it. So right now we're going to talk about the Self Credit Builder Loan. I'm pretty sure a lot of people heard of this. This product been around for a while. However, a lot of people misuse it, and stick to the end because I'm going to show you how to get the biggest boost out of your credit score with this product. Let's get it. Welcome to Credit Monster. I'm your host Daquan, here to help you become the master of the Credit Monster. Let's go. If you find this content valuable, please do me a favor, like, comment, and share so we can help as many people achieve their financial goals. Now let's get to the information. Okay, y'all, so we're going to talk about the Self Credit Builder Loan. This company used to be called Self Lender. They actually changed their name to just Self, and their main product is the Credit Builder Loan. Now, this is another fintech company that's out of Texas. So how does the Credit Builder Loan work? Let me explain. If you haven't heard of it, I'm going to explain it to you right now. The Credit Builder Loan is basically, they give you a loan, but instead of giving it to you in your bank account, it actually gets transferred to a savings account or a certificate of deposit, a CD account, and you can't touch this money. Now, you have to pay the loan back. Once you pay the loan back, these payments are reported to the credit bureaus as positive payments. So this is a savvy way of getting installment payments on your credit report versus getting a car note or getting a mortgage if you don't necessarily need those things. So this is ideal for like college students or young adults who are just establishing credit for the most part, and it can also help established adults build positive credit history if they have a negative credit history. Basically, once you start making payments towards that loan, like I said, you get positive payment history, and then once you have fulfilled the loan, whether it's 6 months, 12 months, or 2 years, then those funds are released to you in the form of a check. Then you could, spend the money on whatever you want. The loan is satisfied. Okay, now with small fees, administrative fees, and then you have like interest. Now the thing about this is no credit check, because the banks are able to mitigate their loss based on the fact that you are not going to touch the money until the loan is paid off. So it greatly reduces the risk that you'll take the money and run off. So that's why they're not really concerned with your credit score, and this is why this is such an ideal product to start with if you have no credit or if you're trying to rebuild credit. Self is very flexible with your budget. Now they have pricing where you could pay the loan every month as low as $25 a month to as high as $150 a month. Now do keep in mind, you do get your money back minus interest and finance fees. Now let's go to the computer screen to actually look at the numbers. Okay, y'all, so look at this. If we go to the pricing, if you go to Self and you go to About and Pricing, you'll be able to see this pricing table, and it will break down all the numbers for you. Now, if you go as low as $25, which I do not recommend, by the way, it's $25, $9 a day, $25 a month for 24 months, which is 2 years. And if you go all the way down, it breaks down the fees. Now, as you can see, the finance charge is $89. Your total payments will be $600 over 2 years, but you only save $520. That's what you'll get back. So you see that you pay, about quite a bit in fees, right? But if you do the $48 plan, the finance charge is a lot lower. So that's the major difference between the two. You get back the $539, which is, you done paid about $576, so about what, 30-40 bucks or something like that. I'm not going to really try to do the math at the top of my head. Don't kill me in the comments, y'all. But I recommend that you do, if you can, the 150, because the 150 will accumulate up to $16.63 after all the fees and everything. You do pay a little bit more in the finance charge department. However, the kicker is they allow you to convert all this money into a credit card. So let me explain that a bit. Okay, so the difference between self and other credit builder loans is that self has a secure credit card. Now, the only way to get the secure credit card is to utilize the self credit builder loan. Now, as you making payments towards the self credit builder loan, you could convert your savings into the secure credit card. As long as you meet certain criteria, you know, one of the qualifications is you have to make 3 on-time payments, which should be no problem, and have at least $100 in the savings portion, meaning you done paid at least $100 into the self credit builder loan so far at the time of you applying for the self credit builder credit card. Now, the credit card requires no credit check, so if you get the biggest plan, you could put up to $1,600 on this credit card with no credit check. And that is not the best part. The best part about it is that it does unsecure. Yes, this credit card unsecure. Now, the thing is, this is phenomenal. It is different because instead of locking your money up into the self credit builder loan, self actually allows you to use your money as you save it. So you're really not losing too much. You're just, you know, losing that administrative fee and that finance charge. But other than that, you could use your money as you save it through the credit card, which you should be using anyway because credit cards are more secure than debit cards, right? So this is awesome. And just to put the icing on the cake, it unsecures. So after 6 months to a year, you get your money back anyway after you done paid off your credit builder loan. So this is a great product. Let's get to the pros and the cons. Okay, so here come the pros for self. Pro number 1 is that is no credit check. Yes, your favorite topic, no credit check. Pro number 2 is that it reports to all 3 credit bureaus. So your credit builder payments reports to all 3 credit bureaus, and also the credit card reports to all 3 credit bureaus. So if you get the credit card, you basically have 2 positive trade lines being reported each and every month. So this is kind of like a dual review. The third is that they have the secure credit card. So that is awesome. That is pretty unique about the self credit builder loan, is that they have that secure credit card option. Not many other institutions have that. The other one is that you can cancel any time. So any given time, if you do like the 2-year plan or the 1-year plan, you could cancel at any time. You know, it's just minus that service charge, that the finance charge and the interest, and they'll cut you a check with, you know, the same business day. Basically, you'll get a notification within 24 hours when your check is going to come and how they're going to pay you, or however they give you your money back. So that is really flexible and really reasonable for most people. Now let's get to the cons. Okay, y'all, so it was really hard for me to find some type of cons with self, but one of the biggest cons is that you can't pause the credit builder account. Now if some reason, like, you may have lost your job or some unfortunate happened, you're just going to have to cancel it because you're not able to pause the credit builder account. Now, the best they could do is a 15-day grace period. Within that 15-day grace period, it won't be no late fees, which is like $1.50 or something like that, and it won't be any negative reporting to your credit report. Even though here at Credit Monster we know that 30 days and longer means a negative report, not 15, but just keep that in mind. You do have a 15-day grace period and you can't pause the account, so make sure you're basically financially secure before going into this product. And you know how we do it. We rate our credit products from a stud, maybe, or bruh. a dud. So let's get to the verdict. Drum roll, please. This one is going to be a maybe, y'all. So this is really situational. It's not for everyone. If you have like established credit, you already have installment payments like a car note or a mortgage or even student loans, this product may not be for you unless you have trashed your credit, and I'm talking about 680 or lower. Now if you have 680 or higher, this really doesn't make too much sense for you. If you have maybe like a lower than a 600, then it may be hard for you to get approved for credit cards or other loans. Then this product may be more beneficial to you, so you could go ahead and get a big credit card and go ahead and get some positive payments. Another good reason to get the self-builder loan is for students, like college students, and also people who are just starting out with credit. And these are people who don't necessarily need to get a car note. So if you are already getting a car note, then you probably don't need to get the self credit builder loan. But these are people who are not going to college, who may be going to like a trade school or something, not getting into any type of debt, and they need to add installment payments to their credit report so they could go ahead and get a cell phone without a deposit. You know, like you have to do certain things. And if you have no credit history, that's just as bad as having no credit history. So this is a good starter for people who are trying to establish credit history, who have no credit history and are not planning on getting a car note or like student loans or anything like that. But let me hear from you. Have you tried the self credit builder loan? Do you have the self secure credit card Visa? Let us know in the comments below. Let us know your experience with them. We want to learn from you. The more we learn, the more we could tame the credit monster. Please don't forget to like, comment, share, and subscribe. And we're going to keep going with content as exclusive as this. Stay tuned for the next one, and I'll catch y'all soon. Peace.